thanks for joining us again for another episode of Ask Spurrell CPA. Today we're talking about accounts payable or AP aging summary. I have May here with me again. So May, what's one thing you've learned so far since you've been here that's maybe a little different than what you learned in school?
Time management, a lot better of time management. At school it was just study, homework, and bed. Here it's, okay, what do I have to work on first? How can I finish it quickly so I can move on to the next one before the deadline? It's a lot more compressed, but it's able to adapt. I was able to adapt really quickly.
Right on, yeah. One of these days, one of these schools is gonna pick it up on me, and they're gonna show the accounting students what the actual schedule of a real life CPA looks like. That would be nice to know before your 4-year degree, probably, but
Yes.
I don't think they ever show it. So the quote that we have here today of Warren Buffett, all-time great investor: "Accounting is the language of business." You know, the statistic, 50% of all Canadian small businesses are out of business, but only 11% of the business get professional help. And in terms of the AP aging summary, we review the financial statements of businesses, and these reports, they're supposed to include an accurate total of who you owe and how much you owe. However, we dig into the accounts payable, we look at that AP aging summary, and often the amounts that are in that AP aging summary, they're either missing or they don't make any sense at all. Which means that the underlying income statement and balance sheet that you're making key business decisions on, they're unreliable. So maybe what are the questions you think these business owners should be asking concerning their accounts payable or AP aging summary reports?
Well, the first one is, how does entering expenses upon invoice date rather than payment date help reports?
So we're entering the expenses based on the bill date, the invoice date. So again, it will make sure that amount shows up in the correct period. So we might have got a bill for supplies in February, but we're not going to pay it until May. Well, that expense happened in February. We want to know, what we can match the income with the expenses then. So, we're not looking, later on, we might have a huge project in February and we're working on it and everything looks fantastic. And then March, we pay the big bill. Well, we want the expense to match the time period where we have that income. So we know what we're making on a project by project basis or period by period basis. And it gives us a little more reliability on the reports.
And what is an account payable or account payable aging summary?
So the accounts payable aging summary is a listing of all the people that you owe money to. And then the next column is the current column. So it's the amount that you owe them currently. So it's not past due. And then we have usually columns for the amounts that were past due, 1 to 30 days past due, another column for amounts that are 30 to 60 days past due, another column that are 60 to 90 days past due, another column for 90 days and more past due, and usually another column with a totaling all of those amounts so we can know what we owe each one of our suppliers, supplier by supplier, and find a grand total at the bottom.
Why are we normally concerned with amounts that 90 days past due are fictitious expenses?
Yeah, so unless we're in huge financial peril at this point and we haven't paid some legitimate payables, a lot of times what happens is the business owner knows that they didn't need to pay that bill. Maybe it was a duplicate bill, maybe it was they weren't happy with the work of that person. Maybe it was, paid twice. I guess for whatever reason, they're not going to pay it. And so it just sits there on their AP aging summary. And then now it's 90 days past due and they haven't paid it. So they haven't made the mistake of paying a bill that's past due yet, although that could likely happen. But often there's an adjustment that has to be made there. So there's a mistake usually on the income statement. Usually that expense doesn't exist. So again, we book that expense in the time period of the invoice date. So when we were invoiced, so it affected our income statement at that point in time, but we never paid it because we didn't feel it was legitimate. Well, now we have an expense that exists there and it needs to be corrected.
Is it generally true that a negative number is either a deposit or a fictitious expense?
Yeah. So usually if you have a negative number, what happens is you prepaid for something. So maybe you prepaid the rent, or you put a deposit down for a contractor to do it, in which case it's going to show up as a negative AP. So we paid it before they billed us, and that can be negative. In terms of fictitious, sometimes what happens is it was a very legitimate expense, and we booked that's why we paid it. That's why we sent them the money, but we never booked the expense. So your supplier is happy because they have their money, but our income statement is wrong because we haven't showed the expense yet. All it's showing is cash has gone out and we've made a prepayment. So when you look at a negative number in your AP aging summary, you got to ask yourself, did I prepay something? Do I have a credit on file with these guys? Or is there an expense that's missing?
What accruals, and would you recommend putting them in a separate account?
Yeah, so accruals are normally, we're always trying to match the revenue with expenses. So we want to book the expenses in the same period that the revenue occurred. So often we have to accrual for accounting fees, wages payable, vacation payable. That can be an accrual. But I wouldn't recommend putting them in accounts payable because they're an estimate. We don't have the bill yet. Usually accruals by nature are an estimate, so we want to accrue them, put it in a separate account, and call it accruals, rather than put it in the payables, because we want that payable to be a list of these are things that we're obligated to pay. We're on the clock now. This is the amount, and this is how much that we have to pay. If we have to make an accrual, that's great, and it's reasonable if it's going to make a material impact on the financial statements. But because it's an estimate, I wouldn't suggest putting it in the accounts payable. I would suggest having a separate accrual account for them.
Should payroll or corporate tax amounts also be in a separate account?
Yes, do not put these in your AP. You should not see CRA or the Alberta government or GST, a specific GST only payment in there. They belong in their own separate accounts. We should have a corporate tax payable account. We should have a provincial tax payable account. There's no reason to commingle that. We should just be able to get that one balance from looking at that one account. Don't take it after a certain period of time and put it in the accounts payable. There's no use for that. It's just making it more complicated than it needs to be.
Should shareholders or related party amounts normally be in an accounts payable?
Same thing with shareholders, related parties. They're very much just like the tax accounts. They have their own accounts anyways. We already have a shareholder loan account. So why would we put the payables in the payable account? Then if we want to know what we owe the shareholder, we have to go through the receivables, the payables, and the shareholder loan account. Just leave them in the shareholder loan account. That's where they belong at the end of the day anyways, because they have to be classified separately when we do the financial statements. So let's keep them separate the whole time. It makes it super clear, and you know exactly what the shareholder loan balance is. Same with the related parties. The related parties will generally have their own separate account on the balance sheet. So we don't ever need to commingle it with the third-party suppliers in the AP aging summary. Often the shareholder loan account and the related party account, they have terms that'll be well outside the norm. We always talk about it. Most of the time it's net 30 and sometimes up to net 90, but sometimes shareholder loan accounts can be years, and everyone's okay with that because it's you and your business are almost one and the same. Same with the other company. You might own both companies, so when the bill gets paid is kind of irrelevant because you own both of them anyways. So it's more of an operational concern rather than an exercise in fairness.
Are round numbers an indication something is in AP that shouldn't be?
Yeah, you should always be concerned about round numbers. Like this, whenever you see a round number, you're thinking this is an estimate. This isn't a real number. This is an estimate. And normally when people bill, they're tacking on 5% GST, or it's a specific billing amount. So whenever you see a round number that you have to pay exactly $10,000 in AP, I question why is that legitimate? I want to see a bill where I have to pay exactly $10,000. So if you see round numbers, immediately your warning level should go up, and you should think, although it's possible, you could owe someone a round number, exactly $1,000, exactly $3,000, but it's unlikely. Even if we're just missing the GST, it's usually unlikely. But it can be a problem, but you better be extra sure in that case.
So what does it mean when you see a positive and a negative amount for one supplier?
Yeah, so you'll say in the current column, you got a negative $1,000, and then the past due column, so let's call it the 30 to 60 day column on your AP aging summary, you have a positive $1,000. They just haven't been applied against each other, so it's kind of a two-step process in most accounting softwares. You have to book the payment to the correct supplier, and then you have to make sure that that payment coincides with a specific bill and check off of that bill, and then it'll cancel the amount out rather than show up as a negative number in one column and a positive number in the other column. So normally it means that there's been a payment made, but that payment hasn't been applied to a specific bill, so the payment's just kind of sitting there.
If you're having a cash crunch, what should you do with the AP aging summary?
Yeah, ultimately this turns it into a powerful tool, because running out of cash is a problem in business, and if you have a reliable AP aging summary, you can go through that AP aging summary. It's your quick reference. You're not going to have hours and hours to go through every single bill that's come in forever, but you can look at it and start identifying. What I would suggest is number one, you want to identify your key suppliers. Who are the ones who can completely cut off your business? I'm a home builder and I buy lumber from this person, and if I don't pay this bill, they're not going to sell me any lumber. Okay, we can prioritize. Then I would suggest normally you want to look at small amounts too. You don't want to grind your day down because you owe someone $80. So even if you have a cash crunch, you look at those key suppliers first. Get as much to them as possible. You look at the small suppliers, just get them knocked off, because you don't want to have 20 people calling over $80 a piece. That's just going to grind you down. It's going to prevent you from, you probably have a revenue problem, you probably need more business and do more work to get more business, so you don't want to be dealing with those small issues. But then those other ones, you can kind of allocate a reasonable amount of funds that we got to get them paid. What's our plan? Are we going to pay the rest of them 50% of what we owe, or 75% of what they owe? And then they're going to see a payment comes in. It might not be the whole amount, but this guy's trying to make good on it. He sent me 50%. I feel pretty confident that he's going to send me the other 50% soon. So it allows you to kind of triage very quickly, because when you have a cash crunch in your business, normally you need to spend a little more time on revenue generating activities. So you want to minimize the time that you're now spending dealing with these suppliers who can become unhappy very quickly if you're not paying them. So it gives you that ability to go through that exercise quickly, and usually it's a time when you need it the most. So thanks so much for tuning in today. As always, hit the like and subscribe button so we can continue to deliver you tips on how to beat the odds at business. And if you have any questions, please leave them in the comments below, and we'll try to address them in future videos. Thanks very much.